Good afternoon. Welcome to OptionsTender. It is Wednesday, FOMC Minute Day, we'll call it, January 8th, 2025. Welcome, everybody. Welcome, traders. So we're going to go through, first of all, SPX as a certain reminder of where we are in this market. It's not a pretty sight. We've come a long way. And I want to go down to I'll go over to SPY next because that's what most people trade. And we'll go down multiple time frames to 65 and kind of show a little bit maintenance of what we talked about yesterday. And we're looking for a little bit more of a bounce. If FOMC is the trigger for a bigger bounce, and then we dump into employment situation, that seems like the likely point of view as of right now, as of making this video. So we'll look at that and then go around the horn with the other indices. And then I just want to mention also the Discord. We have fabulous people in here. Any of the memberships that you pick, whether it's Patreon or YouTube, I prefer YouTube because you get more of the perks. You can get the intraday videos and stuff. But give a shout out to Invictus Soul here. Just really cool, the things that we talk about and the trades and the support that he gave. He's actually, they, I don't know if he or she, but, and by the way, let me know if there's any females in this Discord. There's so many guy traders. I want to know if there's any girls out there that are traders. It's just curious. And so he supports as a Patreon and a YouTube, so that's very generous. I really appreciate it. Also, we mentioned Meta. We put on a trade for Meta yesterday, and if I would not have set my sell for a certain amount, then I would have not gotten that trade off this morning. So with the spike lower, so just a valuable situation. So we'll take a look at it real quick at the end. Okay. So if you're watching this now, feel free to play this at 1.25 or 1.5 speed, just so you can get through this information faster. I'm sure there's other videos that you want to watch, and you want to make sure that you don't spend all your time watching videos. Get the information faster. And we're doing this intraday. So if you're interested in doing this video or viewing these videos intraday, consider becoming a YouTube supporter for 99 cents. All right. Thanks for all the support. Here we go, guys. We have SPX on the monthly time frame. We have the 1929 top here, 2000 top, and we're forming our 2024 top unless we get a new high here in 2025, which I think is doubtful at this point. This is in confluence with 2008 top, 21 top, and confluence right now. So digging into the candle, we have a possible reversal candle that hit that confluence right there, and we're reversing off of that so far. And we'll see. It's an inside candle at this point. We'll see. We have plenty of time left in January for this to play out. On the weekly, let's go to SPY. So here's kind of the same information. We don't go back to 1929 on this, but here you see the same thing. So weekly, change the board. On the weekly time frame, we're sort of in that apex right there. We're getting a reversal off of that 8 EMA. Could we push down from this point? We don't have to bounce, but it feels that way. Things are starting to reverse, and we'll see that on the 65. But what's important on the weekly time frame is this 20 moving average. It's going to be super important going into the future here. We break down from there. I think we go directly to 565. Yes, I do think we'll probably have a deep bounce back into the 20 moving average. And I don't know if that will be before we go lower or after. Okay, I don't know if that makes sense, but I do think we're going to test the lows of this wedge. And so do we test the 20 before that? I think it's possible, and I'll show you why in the 65. But know that this is a breakout area in the weekly time frame. This is a super important area, and we have not tested it to this date. If we go lower, that's where we're going, and we'll call it 560. but the range is 555 to 565, 10-point range. I know that's a big range, but you'll see why in a minute. And also on this daily or the weekly, we'll show this board. Here's where we usually do time and price. And from this correction from 21 into 22, you have the retracement. So we went through all the retracements, 50, 60, 80, blah, blah, blah. Got above the all-time high, tested back, and got to the first major target, and that would be the 127.2. You see how important it was. We rejected off of it, got over, hit our next target at the 162, and just completely had a crash back down to that point, and then formed our wedge after rejecting again off this 162. So you see how important these two levels are. Therefore, once this trade starts to break down, and it's a matter of when, I do think we go to that 561 right there. That would be a precise, but you know, it's never precise. We have the spike through, stop a little short, that sort of thing. So time and price relationship, we have something in the beginning of February. We'll see where we are when price is. I would guess, if I had to guess, I think we'll be lower down to the bottom of this wedge at around 515 at this level in February. Okay, in that beginning to middle of February. So going to the daily. This daily time frame, you have the traditional technical analysis where we're forming this bearish rising wedge. We broke down from it, back tested, and have been sideways since. You see this full range here, which is forming a left shoulder, head, and right shoulder. This didn't quite play out yet. We came right back down to this very important area. Now, do we reject off of this 8 EMA and just continue lower at this point? That's the big question. You always have to be wary of that. So our major swings are to the downside. So it doesn't really matter if price breaks down from this point to me, but it would also be nice if we got that little bit of a bounce, and that should be pretty shallow, around 594, right where the 50 moving average is. That's about 594. And you notice that 595 is just above with the 20 moving average. So that zone right there, it's a pretty shallow bounce, really small, right? So we're really forming an equilibrium, but all in all, I think this is a descending triangle as well. So price is just oscillating back and forth, holding on to this 585 area. Now, the measured move from the head and shoulder, you just simply take a line there from a traditional standpoint, from the top of the head to the neckline, and then you place it at the breakdown zone. So that would take us right into the zone that I was talking about. You see 555 is at the 200 moving average here. That breakout zone is at that 561, and then we have very top of the breakout, back test. That's about 565. So that creates our zone there where a lot of trade happened, that consolidation area, the consolidation here. So that's where we get that zone from. Okay, so this move, I do think that that's our next spot there, where we get a bounce at that point. And like I said, is that the bounce that's kind of deep and test back, the kiss of death, they call it, on that 20 moving average on the weekly, and then get a sharp move to the downside? That's possible. Trade can and will move very fast if it breaks down from this point. This breakout would be a fake break, and we head lower. And I think that would happen fairly quickly on this last move here. Very similar to the carry trade that happened here. You had kind of a choppy move, a bounce, and then a breakdown. Of course, there was a catalyst there, but it's likely we'll see a catalyst somewhere out here too. Going over to the other board, we have time and price coming at 113. So next week, and then after that in later January. So let's see where price is when this happens. Again, I think this goes lower. I think we might extend the bounce a little bit into FOMC and perhaps float up there by the end of the day or into Friday. But if we get up there before 2, or if we get up there into Friday, whenever or if we even bounce, that's where I'm going to add on more puts. And so at that point, maybe we go lower into this time and price area. I have more information on the lower time frame, so let's go look at that. So we have on the 65-minute, once again, the traditional look, bearish rising wedge. We have a back test and a trade sideways where it's coiling up and forming market structure to the downside, actually. Sorry, I checked my phone real quick. The move here is, I think this is our initial move, and then we're getting an I'll show you this actually on the next board, but I think this is the green area, that consolidation area that I was talking about, that price gets into and bounces. I don't know if that would be a shallow bounce or if it's going to be deeper, and then a bigger move to the downside. So I think momentum is increasing as this goes. It doesn't have to be like that. The third wave is typically the longest wave, so that could bring us down. It's just with this breakout zone, I think if we get our bounce here, then the next one is going to be expanding wave 5 there. So I just want to be careful of that and be wary that, don't start buying the dip too early on something like this at the end there. So let's go over to the next board to where we can kind of count this in an Elliott fashion. So I think this is a leading diagonal, and this is an ABC for a 1, ABC for 2, and now we're getting our larger A. This is a 3-wave move. I think this is a B wave down to C for an A. We got our B in, rejecting off the downtrend line, and right now we're continuing to reject off the 8 EMA and the not only on the hourly but on the daily. And what I was looking for is possibly this. Maybe this is a kind of a bear trap here, and we still get a little bit higher. Doesn't really matter with our main positions. It's just our hedges are, obviously going under, and that's what they're there for. So if they go to 0, no big deal. But this is what I was looking for, a bounce, not even a bounce to the 382 at this point, or the 50%. So maybe since we're going lower, the FOMC comes about at 2 o'clock Eastern Standard Time. Maybe that's where the bounce continues higher. So we'll monitor that. Still looking for a little bit more of a bounce, but I'm not looking for primary trades to the upside. I think we're in a downtrend. And since this A and B is complete, now we're looking for a impulse wave, 5-wave move to the downside to this zone here. All right, and so this was the former all-time highs, so that's a very important area at 565 in the lower end of the area. Not only is the 200 moving average, but it's also the measured extension from 1 to 2 for wave 3. So that brings us right into that zone. And again, we don't know how this will fold. Bounces should be shallow. I don't know if it'll be that shallow, but it should continue lower at this point, and maybe FOMC just completely has the market fall out of bed and it just continues lower, because we are in a wave 3 of 3. So this is the most impulsive wave, and it should be pretty relentless to the downside. So just be careful how you play anything to the upside if you do. Nothing wrong with hedges, just direct plays to the upside. I'm not sure that's going to pan out very well. Now, with that said, we talked about it yesterday. This is a bullish setup. If you are a bull, you have all sorts of things going against you. But if this is an impulse wave, which I think it is, only because, and this is what is confusing, an A, you see this A wave for the bears going into B, that's an impulse. Excuse me, I'm saying this wrong. If this is a 5-wave move down here, and you get the B and then a C, that would be to where this would actually be over here, and we'll see that on the Qs. That would be an impulse move. This looks like a 5-wave move. That would be how we would count this, and that's fine. It doesn't really matter because this is going to be a 5-wave move down anyway, but this is confusing because if you're a bull, you're looking for this to be a wave 1, and then a wave 2 into the 60%, and a wave 3 at this point. So is FOMC going to be bullish and we continue higher? That would be the most confusing way to me, but maybe people are buying and this is the trap to the downside. Okay, so with that said, is wave 1 done in here? We're just getting shallow wave 2 and wave 3, not sure, but we have time on our side and we have our swings price on our side too. So let this play out. We have some time frames going into tomorrow. We're closed, but the market is closed. 110, we have something going on here. And then we have another cluster going into next week. And I think that is likely. This cluster here looks good to me, to where the 14th would be, I believe that's Tuesday. And I think Tuesday we can try to find a low. And I know that's a huge move going into Tuesday. If we do get our bounce, or if not, I do think Friday should be a big move. If this continues lower, so be it. But if we get a bounce, I do think Friday is going to be a pretty big trending move. And then we'll get follow through on a Monday, and we'll look for a low on turnaround Tuesday, and we'll see where price is at that time and go from there. But that's kind of what I'm looking for in this move. So sorry to harp on this in different ways. It doesn't matter how you count, as long as you know that you're in a downtrend at this point, and you really have to hold this low to be exact, but the actual setup is here at the 60% if you're a bull. Okay, so on the Qs, pretty much the same thing. We had a uptrend line from our wedge here. I don't have the top of the wedge drawn, but the bottom of the wedge is most important. We had a back test, and then we're moving lower at this point. So we're kind of breaking this level here. Let's see what happens if we go directly down here from now, or tomorrow, or excuse me, Friday. And then this is the zone that I think we go to first. So this one I'm counting a little bit different because we have that ABC into wave 1. That's why I'm counting these different. This one looks more impulsive, a 5-wave move, and I think it's a leading flat. All right, so this is the zone, 44, 45, down to the gap area, and also support right here, about 475. So again, a 10-point zone. And this is how I'm counting it. We have a 1, and then an A, B, C for 2, where C is lower than the A. All right, and that's what I was talking about. This is an impulse move here. It's a 5-wave move, so it looks like this could easily be a 1, 2. And so if for a bull, that's a buying opportunity here. Clearly, the price action's weak, but I think this continues lower into wave 3. Again, really shallow bounce if we don't get one. If we don't really get one at all, there's a little bit of bounce there. Wave 3 should be measured down here, about 482. So that takes us right into that zone that we were talking about. And you have some Fibonacci's down here, 472. So we have price action lower. And at this point, we should get 5 waves into this wave 3. So this is a regular impulse here. So 1, 2, 3, wave 4 bounce, which should be pretty shallow for tech. All right. The DIA and IWM might be a little bit different situation. And so it might help the market bounce higher in SPY wave 4. And I forgot to mention that because this is a leading diagonal, it would not be unheard of that after we get down to our target area, that the wave 4 is a larger bounce that crosses over wave 1. All right, so this could be an expanding type move, and so we have to watch IWM and DIA, the diamonds, in order to figure that out at the time. And then I do think that the Qs are going to have much more of a shallow bounce because the Qs are going to get more bearish. It's going to start leading the market to the downside. All right, and after that, wave 5 could be an expanding wave, especially on the Qs if they're leading, and take us down to the bottom of the wedge. So the move should be a lot larger than the trend for tech than it is for the rest. SMH. SMH having a fake break here. We're at the former level that held price for a while, that coiled up. And if we start breaking that level, then that, says a lot that the price is weak and that this was just a bear flag, not really a triangle. You can still look at it as a triangle and fake break, but bear flag down here and starts to break lower. And again, should test these lows and actually go a little bit lower than that. So we'll see with SMH looking very weak. IWM, it's testing the bottom of that channel again. All right, so this one didn't actually bounce very high. We could be in a complex correction where this is an ABC into an A, we're getting a B wave, and we get an impulse C. So, depending on what price does, we could be looking at a bullish day for IWM on Friday. This could be a good pairs trade. I'm probably not going to do it. I'm just going to be bearish on the Qs. But if you're interested in a hedge, it's a good spot here. Unless we break this zone, then that's very bearish, and this was just a bear flag, and we continue lower. That's possible. And again, it's super shallow of a bounce if that's the case. But if it wants to go higher, then we have definitely an impulse wave coming, and we'll see how that plays out. Don't use IWM very often. And same thing with DIA. Basically just a sideways trade, shallow bounce. Is that it? And we actually have a 1-2 and then goes lower from there. So be it if that's the case. Not so sure, but the Qs have some catching up to do on the downside. And finally, the VIX. The VIX here had the bullish falling wedge, broke out, a nice big breakout, and is now forming higher highs and higher lows at this point. But in the near term, I would like to consider this a ascending triangle where we're tagging here 3 times, but still making higher lows and breaking this 19 zone, a flush break, not the spikes through there. A break of this 19 zone brings us directly to to touch the highs here, and I think we go beyond there as well. All right, and then I don't think this will be a straight shot. I don't think we'll get something like this at this point. I really do think this is going to be a structure that just kind of volatile up and down at this point as you see price do the same thing in the market. So looking pretty bullish at this point. We might not get a bounce going into the rest of the day. I guess we'll have to see what 2 o'clock brings. If we go straight down from here, continue into Friday, we'll see what happens. All right. But I know that I'm holding it on tight to those 560 zone. When we get down here, that's when I'll talk about really actually making a purchase to the upside, and taking profit off at this point. Yeah, let's see what price does. Failing so far. Let's get this video out to you. Don't forget to like and subscribe. Have a wonderful day.